What's up, guys? Welcome back to the channel. I know it's been a minute, but I am back. I want to try to get more consistent with uploading videos, showcasing my journey with this new strategy that I learned, ICT. I used the IFVG strategy, and like I said in my previous videos before, I was trading the break and retest strategy with options. And you guys know, if you guys don't know, options are a little more tricky. You have to deal with a lot more outside forces other than just what Trump or Elon tweet. You have to deal with the Greeks and whatnot, so it gets kind of crazy. And ever since I switched over to futures and learned this new strategy from ICT, it's been a game changer. I've not only been able to secure almost a $600 payout from my own personal futures account trading with this strategy, but also it's helped me pass multiple prop firm challenges. And yeah, I mean, without it, I wouldn't be able to do it. So hopefully this video can help you guys in your journey and using a strategy that I'm going to show you here in a minute. But before we get started, I want to show you guys the most recent two certificates, and these are from Apex Trading. These are 25k accounts. You guys can see July 1st they got passed, yeah, I was all using the strategies I'm going to show you here in a few minutes. We're going to do some live examples too on the charts, so I can kind of walk you through the definitions of what they are, and then we're going to implement them or see them implemented in the charts. But yeah, guys, so if I can do this, you guys can do it too. So hopefully this video will help you learn something new or perfect or get better at what you already know if you're familiar with this concept. So those are those two certificates right here. And real quick, I'm going to show you the most recent payouts that I had. Now this is deposited into my personal account, and this is from NinjaTrader Clearing. Basically, Tradovate, if you guys don't know, if you have a personal account with them, they use NinjaTrader, I guess, for their clearing and whatnot. So this is for $428 on the 11th, and then on the 13th I pulled out $89.72 and then $66 for a total of around almost $600 in just 3 days of trading using the strategies I'm going to show you here in this video. So guys, if I can do this, you can do it too. So hopefully you guys get some inspiration from this. And yeah, let's go ahead and get into the video now. All right, guys, before we get into the IFVG strategy, we need to first look at what happens before the IFVG sets up, and that's going to be a fair value gap. So in ICT, a fair value gap, we're going to go ahead and read a definition right here, and you guys can look on the left. We have a little drawing so you guys can kind of see it in action. So a fair value gap in ICT, it's a price imbalance between three candles where the high of the first candle and the low of the third candle do not overlap with the middle candle's body. It signals inefficient pricing and is often revisited by price as a point of interest. So in short, number one, it's a three candle formation. Two, it shows imbalance. And number three, price often returns to fill or react to it. So starting from the top, it's a price imbalance between three candles. So right over here, as you guys can see on this bullish example, we have 1, 2, 3 candles, and the fair value gap is always going to be right here in this middle big displacement candle. And the way you mark it out is you go from the bottom high, right, this wick, and then you go from the, I would say this is the first, second, third, and you go from the third candle's bottom lowest point, which is this bottom wick, and you're basically gonna draw that little area out, and that's gonna be your fair value gap. And basically what that means is that price was so it was so aggressive that it made this huge, there's a lot of orders in here, which left this void in here. And so what that means is price usually is going to want to come back into this zone and tap it, right? And then it'll make a continuation into the bullish move. And it's the same thing or it's the opposite for the bearish, but the same concept. You have the three candle pattern, you have 1, 2, 3, and the way you draw out your fair value gap is you're going to go from candle number 1's bottom point to candle number 3's top point, and you're going to go ahead and draw that box out, and that's going to be your imbalance. And what you're going to look for is for price to come back into this zone, tap it, and then continue the move back in the direction that it was going in, and that would be bearish for this example right here. So the reason why you need to know what this is because the inverse of that is pretty much what it sounds like. Instead of price coming in and respecting it and going back up, price is going to come straight through this gap with a closure, right? And so it's going to basically invalidate this, and that's going to be your setup for an IFVG. Same thing on the bearish side. Instead of price coming down and coming back into the zone and then going back in the direction of the down move, it's going to come down and come into the zone, but instead of getting rejected, it's going to go straight through with a candle closure above the gap, and that's going to be the inverse fair value gap. And then that's how you're going to take your entry, which we'll get to here in a minute. But I wanted to show you guys what an FVG is first, and this actually I do use this strategy as well. I use for me, it's like I don't want to be a one-trick pony kind of thing. So I pretty much learned all the concepts, and I can use pretty much whatever sets up right throughout the day. I'm not limited to just one way of looking at the charts. I can see multiple entries, but for me, it's more like multiple confirmations of what price action is wanting to do by knowing pretty much a lot of the concepts ICT teaches, right? So this is the first one. So it's FVG. You need to know it before we get to the IFVG. So let's go ahead and go into the IFVG right now. All right, guys, so here we are with the IFVG setups, and on the left, just like last time, we have the picture so you guys can get a visual of what it looks like. This is going to be a bullish IFVG, and over here is going to be a bearish IFVG, and then right here on the right we have a little definition with some little key points. So we'll start from the top. An IFVG, when price closes above or below a fair value gap, instead of respecting it, it signals that the imbalance may no longer be valid and price could be shifting in the opposite direction. It's a clue for potential reversal or breakdowns in market structure. In short, it invalidates the FVG as a support and resistance zone. It often hints at a shift in momentum or direction, and can also be used to fade the original direction. So starting from the top, basically when price closes above or below the fair value gap instead of respecting it. So just like we talked about before, right here, this is a bullish example, because over here we are in a bearish down trend right here, and you guys can see we have the 3 candle pattern that sets up the initial fair value gap right here. So we got candle 1, candle 2, candle 3, and we have the zone drawn from the wick of the candle number 1 on the bottom to the top wick of candle number 3, and that zone right in here, that square, that is the fair value gap. And these guys can remember, in a downward move, we expect price to come into the zone and basically continue in the downward move that it was making in the first place. But over here in the IFVG example, as you guys can read, price comes into the zone, but instead of rejecting, it breaks through it, and then we have that candle closure above the gap, basically negating this fair value gap. So that's the inverse right here on the bullish side. And then on the bearish side, we got the same concept. We have a bullish move up. We have candle 1, candle 2, candle 3. We have the bullish fair value gap right here in between candle 1 and candle 3. And as you guys can see, instead of price coming in, tapping the gap, and then continuing in the bullish move, we have a huge candle closure straight through the zone and closing below, therefore negating this fair value gap. And it should indicate to you that there is a potential shift in the direction of the market, and we could be going lower. So now what we're going to do is we're going to go ahead and jump into the charts, and I'm going to show you some examples of the IFVG in action. So yeah, we'll go ahead and get into the charts now, and we'll go over some of those examples on the chart so you guys can kind of see how I do it. I'll also show you some of the indicators that I use, and how we can draw these boxes using Tradovate, Trading Views tools over here on the side. So let's go ahead and get into that section now. All right, guys, so here we are on Tradovate. Now, real quick, I'm just going to go through, before we get into the examples, I'm going to go ahead and show you guys some of the tools that I use here on Tradovate. If you guys aren't familiar, you could set up this little toolbar here. And basically what I have here is I have this tool right here. And basically what this does is it helps map out if we're in premium or discount. As you guys can see, I have 0.5, which is 50%, and then I have 1. So you can basically see if price is in a premium or discount, and that'll help you set up your trades and whatnot. And then I also have, let me erase that real quick. I also have this right here. This is the Fibonacci extension tool, and you can use this to basically get more confirmation on pullbacks or you know, supports and whatnot, because right in this area here, this is like a golden zone, and so it's just extra confirmation. Sometimes I use in my trading, not all the time, but it's definitely cool to have and to know. And then of course I have over here the long profit and loss setups. So like for instance, let's say you're gonna take this inverse right here, you could kind of use this to gauge, you know, your profit and your loss. So I have that for going long, and then the same thing, I got this for going short. So just show you real quick, I'm just gonna throw it on here. You know, you can go ahead and do something like that. Boom. So just visuals and whatnot. And then of course you have this is just a horizontal line, so you can map out something like, let's say you see an area from way back in the charts on the left, you can snap that there and it'll help out. It'll just go forward as time progresses. And then I also have this right here. This is cool for setting up little trend line things. Like I said, just for extra confirmation, because you see here you get a break of the trend line, and if you compare that with some kind of ICT model, then it'll be just more confirmation for you to take the trade. Over here is a little this is like a little thing to show trends and whatnot. Again, just extra confirmation. You guys can see you broke the trend, you come down. So if you compare this with the ICT model, then it'll just give you more confidence to take a trade. Then here is a little tool to help draw, so you can draw little things on your charts and whatnot. And then of course this one right here is probably the main tool that I use, and this is what I use for highlighting my little gaps. You guys can see I have an indicator here that I'll show you in a minute that highlights all the fair value gaps, and basically I just use this tool to bring some color into them. And then also I can use it to you see we're on a 1 minute. You can also set up these little cool things here that's a breaker. That's a balanced price range one, but you have these little templates here you can set up. So right here I have the 1 minute fair value gap, and all of my fair value gaps are going to be this color. And then if they get inverse, which I'm going to show you here in a minute, they change to red. And so yeah, so that's very cool. You can use this tool right here. It's probably one of the main ones I use a lot, and it's for highlighting my fair value gaps. And then yeah, you got text here, arrows and whatnot, and then this little thing right here I use for, like, you know, mapping out the macros, which we haven't talked about, but the macro sessions are pretty much times in a market where price is more likely to make a move, and it's usually from, like for instance, it's the from 10:45 a.m. Right here to 11:15. So the first I think it's like the first so from 10:45 to 11:15, it happens every time at every hour at that specific interval and whatnot. So let me see how long it is. So let me see, 1 second. So it's basically the last 15 minutes of the hour, and then to the beginning 15 minutes of the new hour. That's a macro in there, and it happens at every hour. Like I said, at every interval like that throughout the day, this is called a macro. So I use it for that purpose there. And then let me erase that. And then for this tool, this is cool for just, you know, highlighting things here and there. You got an arrow on there and whatnot. So yeah, so that's what I use this toolbar for. And if you guys want some more in-depth videos of how I have my setup and whatnot, just let me know in the comments, and we'll definitely get to that. All right, so let's go ahead and get to the examples. All right, so I brought up the picture again so I can show you what you need before you see an IFVG. And if you guys remember from earlier in the video, you need a bullish fair value gap or a bearish fair value gap first. So here's the picture over here, and we're gonna look at an example real quick of a bullish fair value gap. And let me go ahead and mark it out for you. So as you guys can see here, we have a price movement down. Let me go ahead and erase this line real quick. Oh, I can't. Okay, so we have a move down, and you guys can see it's a 3 candle pattern, right? And we have 1, 2, 3, and remember the gap in the middle, this void, that's what you're gonna highlight with your little box tool that I just showed you guys. And you could do it over here, or you can do it over here. So since this is a bullish example, we're gonna go ahead and highlight this one. And so you want to go from the, you can do from the bottom, the top of candle number 1, and you're gonna go up to the bottom of candle number 3. So remember, you got 1, 2, 3. It's a 3 candle pattern. And so yeah, you use this little box tool, and you can go ahead and write in there, since we are on the 1 minute, as you guys can see, I go ahead and set up the 1 minute fair value gap like that. And basically what you're looking for with the fair value gap is you're looking for price to come back to the gap. It can either come inside of the gap and actually like come into the zone, or most of the time it's gonna come like right where it's at right here. It won't come in all the way. So that's something to keep in mind with the fair value gap strategy, is that if you wait for a total retest to come in here, from my experience and from what other traders have said too, when I first learned the strategy, you're gonna miss a lot of moves. So the way I like to do it is, once I have it mapped out, so let's come over here to the replay, sorry about that. We're gonna have it mapped out, right? Okay, so we're gonna go ahead and play it. So the way I like to do it is, once we have this fair value gap, I'll go ahead and set up my position using this tool down here, the long position, just to anticipate if price does come in. I like to set up my my entries a little bit above the gap, because I don't want to be left behind. And as far as stop loss, like I said, it just depends on your risk parameters and whatnot. Usually I'll do it right at the box, or you can do it behind, you can do it at the bottom of this candle, or you can do it at the bottom of this swing low. It just depends. Usually just do it right at the box. I think I told you guys I don't want to risk over 25 points for any trade. But sometimes, you see here, this is a pretty big fair value gap. Sometimes I can allow it to go up to 30, but like I said, it just depends on what your risk parameters are. Honestly, the bigger the fair value gap, the better, because if you start messing with fair value gaps that are like really small, like, like 7 points and under, they're not as powerful as like a fair value gap like this. Like this is 20 point, this is the 20 point fair value gap. So that's pretty much like a solid, really good fair value gap where you could get some reactions to continue the bullish move when they're this big. And this line right here, guys, this is something you can set up. This is consequent encroachment. Basically what that means is, when price does come into here, you don't want to see price getting a candle closure on the bottom of this zone in this box. If anything happens below this zone here, if anything happens below this zone in here, that's not too good for the move to play out. It makes it more weak. So you want to see price come in, either not touch it and go up, or you want to see price retrace and come in here but don't cross but doesn't cross this line. Then that's gonna imply a stronger move potentially, right? So that's what that line is for, and I'll show you guys how to set that up real quick. So you just click this box, you go to your settings, and you're gonna go ahead and I believe it's let me see, yeah, right here, you click this middle line, and this is how you can change the background color too. So you see I have mine here, and you can also do the transparency and whatnot, opacity or whatever, but this is where you put the line in. And yeah, you can even extend this right if you wanted to, and then boom, it'll go all the way to the right. So yeah, that's how I have mine set up. And then what you want to do is, once you have it set up the way you want it, you can even do the text here, so you guys can see 1 minute fair value gap. So anytime I use this template, it's going to pop up just like this. So once you have everything set up, go ahead and save as and name it what you want to name it, and then push OK. And that's how you set up the box. Okay, so once I see this, I'm going to set this up, and I'm going to have my limit order here. And then of course I'll be targeting the next draw on liquidity, which it could be this area, or if you go further back, you guys can see we have these highs up here. So it just depends on where you want to do. We also have fair value gaps in this area here, as you guys can see them highlighted there. So that's what you want to be targeting. And yeah, so we're going to go ahead and play this out and see how we get an entry and how it would look with the fair value gap. So here we go. Boom, we got that retrace, and now we're in. And so what do we want? What do we not want to see? We don't want to see price come in and close this box. We don't want to see a candle closure below this box, because that means it's invalidated and we're out. And that means it basically sets up a new strategy or another strategy, which is the IFVG, which I'll get to here in a minute. But let's go ahead and play this out, see how it goes. And then you guys can see, boom, straight to take profit right off of that fair value gap. So you guys can see how this strategy can definitely help you guys out to see continuations and moves and whatnot. But also it's going to lay the foundation for the next strategy I'm going to show you guys here, which is the IFVG. So let's go ahead and find one of those. All right, so now we're going to go ahead and look at an example of a IFVG setup, and this one's going to be in a bullish direction. And actually, this little this pattern right here, it's actually has every example that I want to show you, which is pretty cool. I don't have to go looking too far. All right, so with the IFVG, remember that is the inverse of a fair value gap. Now I'm going to show you how it will look right here. As you guys can see, we need a 3 candle pattern, and then the void in the middle, that's going to be our fair value gap, right? And instead of price coming into the zone and getting rejected and continuing in the downward move, we're going to get a close above it. And that's going to now invalidate this fair value gap, and it's going to turn it into an IFVG. And then we're going to go ahead and enter at the candle closure here, stops below the gap, and we're going to target opposing liquidity on the top, either highs from the London or Asia session or previous day, or any kind of fair value gap that might have been left unmitigated or untapped up above. So right here we have a perfect example. So I'm going to go ahead and move this out the way, and we're going to go ahead and check out this IFVG setup. We're going to go to the replay, and let's come in here, and let's check out how it goes. All right, so there's other confluences that can help. Like for instance, if you were to mark out this level here, this would be an area of sell side like liquidity that you could look to get swept before. Now this is getting into more advanced entry methods and whatnot, but I'm trying to keep it as simple as I can. But this could definitely help, because you want to see price, you know, potentially come down. Like, oh, if I can click this, you want to see price come down, right, and then sweep this level and then come up, inverting the gap to the to the upside, and then you'd be targeting like this level here for liquidity or anything above. So let's see if that happens when we play this out, and then we'll map it up in real time. So let's go ahead and play it out. So we got price coming down, and look at this big candle coming down. We got some good displacement here, and as you guys can see, the indicator that I have has highlighted that fair value gap right here to the downside. Let's see, and then right here, boom, we have that sweep of this sell side liquidity. So everything is looking really good. And like I said, when I'm watching price, if this box comes in and I know that we're getting close to this level, I'm going to be anticipating that, hey, this little fair value gap right here, this could get inversed, and we could be looking to possibly come up and target, you know, this buy side liquidity up here, especially if we got some almost equal highs up here. So it's looking really strong for me. So I would definitely mark this out just like I showed you before. So I'm going to go ahead and say that this is a 1 minute fair value gap, and it's going to be just like I set it up. So it's going to be blue and whatnot. So now we're watching for price to what? We're watching for price to come through, right, this gap and have a strong candle closure above. As soon as it does, we're going to take our entry. So this is what we're looking for. Let's see if we get it playing out. So we're going to go ahead and continue price, play it out, see what happens, come back down, still waiting. We don't do nothing, right? There's no trade until this thing gets inversed. So we're being patient right here. Okay, so got to work on the patience. Don't jump in too early. Oh, right there, boom. All right, so let's go ahead and walk it back right in here and go back. All right, so boom, right here we have our candle closure. So that is now telling us, hey, we inverted this. This is now invalidated. So I do this really fast. I turn that to red. So that's telling me that this bearish fair value gap just got inversed after this sweep of liquidity here. So we could be looking to change directions and head to the buy side liquidity here, or like I was showing you, these highs up here. So we can be looking for a setup like this, And what I would do now is I would go ahead and enter the trade. So I would have my limit order here. Let me go ahead and set it up. Boom. As soon as that candle closes, stops would be below the gap, and I would be targeting the next draw on liquidity, which is up here. Now, usually this is like a one, almost a 1 to 2. So usually, you know, I'd like to go for a 1 to 2, but if I, you know, hey, a 1 to 1, I'll take it as well. So I'm not going to be greedy. Get what the market gives you, and you know, be happy with that. We also have another level up here that you could target and whatnot, and all this is going to be done before you actually come, you know, actually start looking for positions. You want to be mapping out your buy and sell side liquidity zones before. So let's go ahead and play this out and see if we would have hit take profit. And the way this gets invalidated though, this IFVG, is if price comes down and closes below this gap. If it comes below and closes below this gap, it is no longer valid and the trade is a loss. Okay, so let's go ahead and play it out and let's see what happens. Here we go. All right, we're getting boom, almost hit it. We hit the take profit right there. So that would have been 1 take profit, hit it again. So right here, boom, you know, you could take off 3/4 of your position. A lot of traders, what they like to do is as soon as we hit this level right here, as soon as we hit this level here, a lot of traders would take off either 3/4 or half, or they'll go ahead and make it a risk-free trade by basically moving their stops to break even, and then they'll let the rest ride out. So there's no more stress, right? You're ready. You took off all the risks. So that's how you can play it as well. But let's just say that that you didn't, right? You could still take half off here, and then once you did that, you for sure want to go to break even and leave a runner, and let's see if it'll hit that last take profit at the top. Boom, right there, we did. So as you guys can see from that example, from this inverse fair value gap, we came down, we swept this sell side liquidity, we inverse this bearish fair value gap with the candle closure right here. We entered as soon as the candle closed, stops below the gap, target opposing liquidity, which is what equal highs or buy side liquidity that's left up here, or fair value gaps that are left open. And that's exactly what happened with price. It went and smashed all of those take profits and whatnot. So sorry about that. All right, so that's the examples right there. I hope this video has helped you you know, get more clarification on the strategy I trade. But you know, if you guys see that it could be an option for you, definitely go back on my page. I think I have a couple more videos about it, but like I said, going forward, I do want to do more trading video recaps of price action from the week, trades that I've taken. But yeah, so I hope this video helped you, and if you guys have any questions, leave them down in the comment section below. And don't forget, I did actually start a new ICT Discord. It's brand new. I think I got like 3 members in there, including myself. So it's brand new, guys. If you guys want to join the community, join the family, we can grow together. Link's going to be in the description below, and also my my codes for Apex are going to be down below, so you can get the best discount available with Apex. And yeah, I hope you guys enjoy you know, the rest of your week, and we'll catch you on the next one.